Hi guys, I just took two trade today. One was in Apple and another was in AAPL. So let's start with Apple. So if you look at Apple, Apple was consolidating here for quite a bit of time, and there was a massive sell-up happened in 31st January from this exactly same level. I was watching it for a few days, and my plan was if it's come back below the daily range, open or like sell off, then I'll go for a short. So according to the plan, it's happened today. So if you go into the charts, it was the late pre-market was weak because it never touched the VWAP, and also was closing below that, and last 10 minutes was extremely bearish. At the open, it sold off. This could be a good place to entry, but yeah, I didn't like it because it was jumping here and there. So finally, after uh, 10 minutes, it's touched S5 and was consolidating here, and there was a little triangle here, and also volume was pretty decent on the right side. So I took a ABCD trade here, but eventually it come back to 241.50 and then push up. So, and I got stopped out. It's okay. Even though I lose money, I consider this is a good trade because every single trade cannot be a winner, right? But the one key takeaway from it, also for me, is even though it was selling off, you can see big push up from the bottom side, like someone buying, someone buying, someone buying, and then eventually it squeezed me up. Then later on, it come to the opening price and then sold off. So in 1 minute, when this sell-off happens, it could be a good entry here. The reason that I'm saying it, because if you see the candles right now in 5 minutes, there is no massive push from the bottom side. Like there is, but very little that confirms that sellers are in control. And the risk reward could be like, your risk if you enter like 243-ish area to 242, like, 240 to 31, it's around like 30-35 cent risk, and then your target could be 242, which is 80 cent at least, 2.5er, and then you can also aim for the low of the day, which is it's coming right now and with big volume, so which is very much possible. So it could be like around 3.5 times than the risk, but it's okay. I missed it here. The second trade I took, it's on APP. Although I made money here, but I consider it is a bad trade. The reason is I didn't manage my risk accordingly. I wanted to take the short at 310, but I got a bad feel. So my risk was about $10 a share, $10, $11 a share, and my reward, this is the full ATR and a daily level of 290. So my reward was like about $20. So it is 1.6 or 7 times than the risk. This is, I don't consider is a good trade. And also I did another mistake, is I added into my loser to average it out, and there was no reason to do that. So if you see my adding position, I took the position because I saw this as a red candle, right? But this red candle doesn't have any volume at all. Even the previous three green candle had like big volume, but the red candle has really small volume, and then it squeezed up near my stop loss. It claimed, I think, 319. My like stop was around like 1950-ish, so it didn't hit it luckily. And also I took oversized with this ad. I got oversized in this particular like time. I was at around 4% of my account, and which is not good at all. I shouldn't, personally, I shouldn't take, or no one should take more than 2% risk in a particular trade. But So guys, please avoid this. It can blow up the account so easily, and it can mess up the whole week or could be like couple of weeks sometimes. But the difference is if you see the 5-minute chart in APP, you see this is the time where I should take the entry when the 5 minutes confirms 9 EMA rejection and in a doji, and also in 1 minute this big volume bar pushes, right? And this candle, it's like literally eat it all, and the second candle come off to lob this candle, and then two small red candle, like green candle, and also with very small volume and also touching the 9 EMA and rejecting it. So if I took the entry here, if I waited more and took the entry here, my entry should be around like 3010 and my risk is around like 315, so $5, but my reward was like $20, which is 4 times the reward, right? I could do some partial out here and then here. It could be a really amazing trade. I was lucky this time, but not all the time. Market gave you this opportunity to cover your losses, and I shouldn't do it. I shouldn't do it. It's a massive mistake. Please, guys, be careful with it, or else it can be a account killer. And the thought process to take the trade was like it was gapping down massively in the pre-market for something. I couldn't find any news, but it was. And then it was at the open, it have like a little bit of buying, and but never really could claim view up, and it kept rejecting. So, and then once it done sold off till here, my plan was to take the trade till a full ATR. Thank you guys. If you have any questions, feel free to comment below. From my knowledge, I'll try to answer it. Thanks.